Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning pre-market webcast. All right, happy Friday, everybody. We've got a lot to get to today. This is a pretty important day. We had the 2401 high Wednesday. The Bears were able to not only avoid a second band ride, they were able to push back a little bit. And what's going to be key heading into the day is, can the Bears follow through on what everybody would call a very successful day? Bears have done this before. They've had successful days, maybe even a couple of successful days, but it's the follow-through part that they can't get right, okay? What I'm going to be watching for today is if we fully engage the blue line here, the 9-day simple moving average, and if we do, what is going to be the result of that? It's 70 quarter right now. You can see back on February the 24th, February the 28th, the 9-day essentially marked the low. Did it back here as well on February the 8th. If we get down to 70, that's an area that I would expect the dip buyers to defend, and it's a potential candidate for the low of the day. That's just, put that on your radar. If we get to 70, see how it looks. For now, we're seeing tremendous support, at least in the pre-market, at VWAP, which is hanging right around at 77 even. So we're going to have to watch that as we head into the open as well. But the other critical feature is, here's an hourly chart. We've talked for the last few weeks about the hourly midband. Where did we fail yesterday morning, here's your 9 a.m. candle, tested the hourly midband resistance, and then we got the move down. For the last 3 hours, we've been playing on either side of the hourly midband. The Bears have done their best to try to get it below 77. They haven't been very successful in doing so. I don't think we're really going to get a solid answer to this question until we get into the regular open in about a half an hour. But it's definitely something to watch today. It's something I'll be talking about during the midday update. As long as they can hold the hourly midband as resistance, the Bears have a chance. Now, if 77 holds off the open, if we start spending time above 2380, then you have to look at 86 to 87.5 as an area that could potentially be tested on the upside. I don't think the Bears want to get into that game, because if they do, you're going to get the "oh, here we go again" dynamic. The "oh, here we go again" dynamic is, hi, I'm a bear, I'm a short. I get beat up every day of my life. Every once in a while I get to have a good day, but then the next day comes along, and just when I think everything's going to be okay, they come and hit me over the head with a bat. I fall down, and we go do new highs. I mean, here we go again. It is prevalent in this market. It is the reason why we have done as many handles after the election as we have. And if the Bears don't stand up down here, if they let it get as far as 87.5, then you have the distinct potential for a Friday ramp job. Okay? One last chart to show you. 5-minute chart. This is the one I talk about a lot on the. This is the one I do the midday and the end of the day report off of. Here's VWAP. So yellow line VWAP, volume weighted average price, 77. Multiple hits of 77 in the last half hour or so. So, if you're short, you want to stay below 80. It's 80 versus 77, and we're not really going to get an answer to that question most likely until after the bell rings at 9:30. But definitely something to keep an eye on. All right, everybody have a great day. See you for the midday update. Follow us on Twitter at PrincetonTrader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.